Welcome back, everyone. For this session, we have a great interview titled Facilitating a Frictionless Cross-Channel Experience in the Age of Mobile Commerce. Joining us for this interview is Pedro Pinto Coelho, Chairman of AFIF FinTech InsurTech Portuguese Association, and our interviewer today is Lou Zorawski, founder of I Know Me. I'd like to remind our audience that they can send their questions using the chat feature, and if there is time, the speakers will do their best to answer them. Lou, I'll hand over to you.
Thanks very much, Emma. It's a pleasure to be back and to be able to put on the spot some of the world's leading proponents of buy now, pay later, and to try and understand the dynamics of this market, not least in terms of how this feature or this product has exploded in the age of mobile. And I have with me Pedro Pinto Coelho. I am particularly excited by this because I'm fascinated by some of the backdrop of some of the Portuguese angle in terms of the sort of Portuguese voyagers and explorers' way in which they can find things and exploit it and take it around the world. Now, Pedro is now representing APIF, which is a Portuguese not-for-profit association that promotes the development of fintech and insurtech in Portugal. But until recently, he was also instrumental in a challenger bank in Portugal. And he has a big background in credit, fintech, and of course, banking across many different geographies. So, Pedro, let's see whether you can expand on that a little bit and sort of flesh out your career a little bit more and set the scene for your involvement in fintech and buy now, pay later.
Very good. Thank you very much for the introduction, Louis. Well, I can say that over my professional life, my background is basically in investment banking, and I had the chance to set up an investment bank back in the early 2000s in Brazil. So I got to really be able to interact closely with the economic environment in Brazil. And then fast forward, I've been also in frontier markets in Africa like Angola, and later on in a challenger bank, BNI Europa in Portugal, where we had an European strategy, and obviously with the support of partnerships with fintechs back in 2016. That seems like a long time ago, because back then not many people were that interested in fintech, and even less on buy now, pay later. So as part of my strategy at BNI Europa, I was trying to the extent possible not to compete with incumbent banks, because I was present in an environment which was a small market, overbanked, and a country that had just been coming out of a recession. This bank was basically a year and a half old, and the initial thought of doing the cross-selling between the subsidiary and the parent, which was based in Angola, on the back of trade finance and correspondent banking activity, was not really enough to justify the banking license. So we really thought hard about doing different things that would not necessarily confront the existing banks. And we created different alternatives like digital consumer lending all throughout the process, including point of sale financing. And it was also at that time that, because of my experience back in Brazil many years ago, I also had a particular interest on buy now, pay later, and I started having discussions with a couple of startups that had, the ability to create an infrastructure that would allow us to replicate what I had seen back in Brazil many years ago, and it was very common. As a citizen, when I arrived in Brazil back in early 2000s, I was very naive, and I didn't know, how things were in Brazil in terms of acquiring, furniture or anything. And they would actually tell you the price of the installment instead of telling the full price of the particular article. So yes. Sorry,
Pedro, carry on. Let me finish.
No, I was saying, if you actually do some research, you will see that the installment methodology, or the buy now, pay later model, actually already existed in Brazil since the 90s. And this had to do with the fact that Brazil, as you know, it's a case study for hyperinflation, and people were never able to save enough money to actually buy then the whole good. So ingenuity basically became, started this idea of installments. So companies, any store, to allow clients to afford some of their goods, they just said, okay, we might as well just allow the client to pay in installments. This was started informally, like in many countries, people didn't have money even to go to the grocery store, and they would pay in installments at the end of the week or at the end of the month. In Brazil, they took this to a whole new scale, where basically, particularly the furniture stores and the white goods stores, they would have a scheme whereby you would have some sort of document where you would go like every week or every month and pay the installment. And this would also become a way for the company to sell you further more goods. And obviously this whole industry came to a point where everyone, from the travel agent all the way to any type of store, after a certain volume, would always propose the good to be bought in installments. So the buy now, pay later element is so important that now it accounts for more than 50% of all the sales in Brazil, even as interest rates came down. And fast forward,
you're breaking two myths here. So it's really kind of, you're shattering my illusions here. Number one, I thought the Australians invented buy now, pay later. You're now telling me, this is probably a conference quote, it was actually the Brazilians that invented buy now, pay later.
Exactly.
And secondly, you're saying it predated really the era of mobile and multi-channel kind of activity. Because I had this vague notion that Brazil was influential in the sense that the different demographics meant that consumers went for different channels and found easier ways of using their mobile phone apps as a way of taking advantage of this new form of credit. But you're saying this kind of behavioral thing was set way before the era.
Exactly. Yeah, the product itself became mainstream well before the technology came in place. I would say they were the inventors, and even the Visa and the MasterCards locally, they would actually allow you to do the installments, because anywhere at the cashier would ask you, many times you want to pay this particular purchase. So as long as you would have a card, they would split it in as many times as you would, up to 12 times or something. And interest rates on credit cards are tremendously high in Brazil, as you probably know, and that's why fintechs like Nubank now are quite successful, because the margins were there and they were able to reduce those margins and allow clients to get more competitive products. But effectively, countries where interest rates were particularly high, like Brazil and others in Latin America, started using this installment product. And then when I tried to also implement this in Portugal, although interest rates in Europe, as you know, are quite low. So Portugal had basically three problems. Problem number one, interest rates very low. So it was not really something a must have. It's a nice to have, but not necessarily a must have. The second problem had to do with scale. Obviously, one thing is Brazil, the other thing is the domestic market of 10 million people. And thirdly, the regulation, because, back then in Brazil, the regulators were quite flexible, and they didn't actually insist that the store, when they did this, the client would have to sign something and do the KYC. The regulators in Europe, they consider this a consumer credit. Therefore, you have to do exactly as if you were doing a consumer credit to buy your auto, your car. So it has some peculiarities that slow down the ability to provide credit right on the spot, even if you want. And obviously, more recently, I would say there has been a big advantage of using the technology, and particularly AI, and the likes of Klarna came into place in Europe, as you know, in Sweden, and then later on in continental Europe, UK, and the US, by using artificial intelligence and try to reduce obviously the non-performing loan component. Because if you want to do an instant credit, you have to try to find out how the client behavior is. Back in the old days in Brazil, people knew each other. So the person would come to the store, they would lend you if you were buying a refrigerator. Maybe they would not lend you if you were buying something that was not a core need for you. So they knew that you would come back. You didn't want to have a bad credit with that particular store. Obviously, as the market grows, it becomes more complex. And that's why I think it was very valuable for Klarna and other players in the US to try to use big data to really reduce the non-performing component of it. And then a big event came in, as you know, in Australia, where Afterpay became quite popular in Australia. And I think it's just basically an ability for people to afford things today that otherwise they would have to wait. And I think that is why this is a big phenomena elsewhere, everywhere, because goods are increasing in price, but wages are staying low, and people are eager to fly today or travel today rather than wait 1 year to save. So they will take a chance to pay. And then on top of this, I would say also stores across Europe, particularly in Portugal as well, they are now offering a good up to 3 or 6 times at 0 interest rate. Although we all know that money as a cost, we see that now partnerships, particularly in Portugal, between Cetelem, BNP Paribas, and the large retail group, where you have the ability to buy anything at 0 interest rate as a way to get you to buy that particular item. And obviously then there is a commission being paid by the retailer to the bank, in this case BNP Paribas, and other places in the world are doing that. So because we have such low interest rates, now the name of the game is no longer how much interest am I going to pay. The retailer would cut a bit of its margin just to attract more clients into their store, basically. That's why this has been evolving.
The risk of being quite sort of highbrow and all macroeconomical. I mean, let's go back to the origins of Brazil, you know, around about time of extraordinary high interest rates and then credit crisis of early 2000s. We're now in a fairly unique position where obviously we have negative interest rates in many places. We have stagnant or zero growth. We have, I mean, I've been observing the Brazilian space for the past 5-10 years and just seen the loosening of policy and loosening of regulation to encourage newcomers to come into the marketplace. That's not unique to Brazil, but that kind of like, there's been sort of like almost this policy driven objective to say we need more credit originators, we need more people spending, otherwise we will not get out of this stagnant economy we're in. So have you sort of in your travels, in your sort of Portuguese Voyager travels around the world, are there other places like that where there is a loosening of policy to try and actually encourage more schemes like buy now, pay later?
Well, I would say that in general, emerging markets have some inefficiencies. So Brazil was really the very good example because it has banks charge high commissions, they charge high interest rates, and until very recently, you could not even finance your home because of these very high interest rates. And it was always a struggle there. So I think that is why the regulator is pushing very hard for competition, because effectively the financial system in Brazil is an oligopoly composed by 2 or 3 very large institutions. But Brazil is very vast, as you know, it's almost a continent. And I think the regulator is doing a good job by using the technology, the digitalization, to allow underbanked and unbanked people to participate, number one, and number two, the middle class to have access to credit in an easier fashion without the costs associated with the past. You know, as I told you before, credit card interest rates were running on the 200-300% a year. So it's madness. You know, if you would miss a payment, you would be on the revolving credit all your life. And that's why they are now pushing hard to reduce those interest rates. I mean, they didn't come yet for interest rate caps, at least high cap. I mean, they still have but high caps. But I would say they will come to that. In
I'm
other
put you on the
markets.
spot. I mean, it's like, you know, you could argue that Portugal, going back to your home country, that's, I'm not sure if it's an oligopoly, but it's certainly got a concentration of a small number of banks. Do you think the regulator is doing enough there to encourage the kind of the growth of alternative schemes like buy now, pay later?
I would say the alternative schemes have not flourished. Apart from that scheme I told you about, subsidizing the client on the interest rate by providing zero interest rate. So I think there is some work to be done, because we do not believe that it is a zero interest rate. So in my view, I think the regulator should really force the retailer to explicitly say what part of the margin you are actually paying and what is the real interest rate you're actually paying when you do this type of schemes.
Very good point.
And
yeah.
I think the Portuguese regulator has been more concerned about the bad banks and the some collapses of financial institutions in Portugal, a bit like Ireland or Holland, where they had some large banks falling. And now they are more concentrated on making sure the system is sound, rather than, you know, opening up to extreme innovation with risks associated with innovation. So they look more for a safe net to guarantee the system is bulletproof, rather than open up across different areas. I can tell you, as an experience, the regulator was forced to do account opening remotely, to allow us to do account opening remotely, because we had someone from Germany coming into the Portuguese market doing that with the approval from the regulator in Germany. So we had to play catch up in this situation. And other cases we have the same. So I would say that the worries are a bit different than markets like Brazil or others that have other concerns and social concerns regarding this. But yeah, I think Portugal has played, the regulator has played a very important role also on protecting sometimes the client, to a point where I think it's a bit overdoing it, a bit paternalistic in a way. I think the good thing is it should be in the middle ground, not one extreme or the other. I think some markets are a bit over paternalistic, over protective, and some other are too liberal, and obviously problems can happen. So I think we should be in the middle.
I think your key point there, and I think I'm agreeing with it, I hope, is that, you know, whilst regulators are focused on systemic risk, and they're doing that for obvious reasons, because we've still got the memory of 2008 in our heads, maybe not enough is being done to encourage that kind of openness, transparency, and fairness, which is the root of proper, you know, customer transparency or customer centricity, whether that's the customer being the merchant, whether that's the customer being a citizen who takes a loan. And I guess that's where there's going to be a need to focus in future, to try and get that trust through transparency, and that's not a bad thing. A lot of people think these products are bad things because they generate accidental credit, which is bad. I'd like to sort of just postulate that for many people, and this is your original point, for many people this is not an accidental choice. This is a deliberate choice, because what they want isn't available from the traditional banking sector, or hasn't been available from the traditional banking sector. And it's incumbent upon fintech communities, whether that's in Portugal or elsewhere, to try and make sure that that choice is put in place. We've only got a couple of minutes left, so I'm going to give you one final poser question, which is, you know, based on your voyager's experience of these very complex marketplaces, what's the final recommendation to people who are going to be trying to set up a business in buy now, pay later, and trying to launch it wherever they are in the world? What's your final recommendations or lessons learned?
Well, my recommendation is that you really have to study very well the regulation and the expectations of the regulation going forward. That is very key, because you can be left with no business going forward, like what happened with the payday lending industry, for instance, right? In the UK and in the US. Number one. Number two, I think regulators and the society in general should think about financial literacy at the beginning, when you are in school, rather than trying to limit the choice at the point of sale. You should be at least knowledgeable enough on what you're getting into, whether you are doing it through a credit card or through a payday, a buy now, pay later solution. You should have the freedom to decide, but you should have enough information to know that you may be paying interest, you may be incurring into additional costs. And that's
Here.
something
So
that
that's probably a call
regulators.
to action for governments more than anything else. More education, more
Exactly.
awareness in this area. So many thanks for that. It's been an excellent sort of exposition of a Portuguese voyager's view, and I like the way that you say that, you know, without knowing where you're going with future regulation, future policies, you end up discovering new islands. So very apt for somebody. I look forward to traveling again and for corridors reopening and visiting the vibrancy of Lisbon and Portugal. So thanks very much for doing a great job of representing your fintech industry. And with that, I'm going to hand back to Emma, and we're going to carry on with the next session.
And Louis, thank you very much. It was a great conversation. It was a pleasure having the conversation with you.
Thank you very much, Lou and Pedro, for that insightful session and for sharing your knowledge with us today. And to our audience, please make sure to stay tuned for the next session, titled Buy Now, Pay Later Doesn't Work, the world before and after arrival of new payment methods. Thank you again, both. Bye-bye.
Yes, Emma.
Bye.